The Reserve Bank lifts interest rates for the 8th consecutive month and says there are more hikes on the way. The competition watchdog warns airlines about sky-high airfares, and the main engineering contractor on Snowy 2.0 goes bust. It's Wednesday, the 7th of December, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I love the intro. Sky-high airfares. Nice. Competition watchdog warns airlines on sky-high airfares. Well said.
Do my best. Now, speaking of airfares, Sean, kind of a loose, kind of slightly tenuous connection, but today is Wednesday, which means that the new episode of How Do They Afford That is out today. And the link to airfares is the fact that we're talking all about holidays today and about how you can basically have a holiday, and the holiday that you want, that's not going to leave you in a whole pile of debt afterwards.
Can you do that?
Yes, you can. And the secrets are all revealed.
I can't.
Well, I know. We learnt all about your inability to. Well, and that's not really your fault. I mean, you kind of lost out on the exchange rate and all of that. So we can blame external forces for your inability to have a budget holiday. So I'm trying
Can I just say on that, because I knew I was going overseas 6 months in advance, and what I did every month at the same time of the month, I bought US dollars. And the idea, you're basically hedging your way in. And the idea there is, you're not always going to win, but you're not always going to lose. And so the idea is just once a month, I, exchange, it might have been $800 or something or other Aussie, or it might have been 800 US and 1,000 Aussie. And that's how I did it.
So all the complaints in about the 3 weeks leading up to it.
Irrelevant, really.
Really, you were just having a whinge for the sake of having a whinge.
I mean, look, I overspent and therefore I had to use my local credit card, which got the worst interest rate, etc. But yes, I had actually thought about it beforehand and gradually bought US dollars in the run-up to the holiday.
Oh, okay. Well, I mean, that's a fantastic tip. That's the kind of thing that we actually talk about on the episode of How Do They Afford That? And you can find How Do They Afford That wherever you listen to podcasts. We'll put a link in the show notes and everything today. It's with Canna Campbell, the founder of Sugar Mama TV. Really, a lot of those helpful ideas and things. And now's the time to kind of be thinking about how you're going to pay for a holiday. And even once you're actually on a holiday, how you kind of limit that spending without limiting the experiences. So it is a good one. Sean, you have an interview after the show today with Carola Jonas, who is the founder and CEO of Everty. This is about one of my favourite topics, EVs.
Yes. In fact, what Everty does is run the software that runs the charging stations around the place. So we talk about, one of the biggest issues on EVs outside price is how do you charge them? Will it ever be a case where you can charge them at home? When you go to malls and shopping centres and plug in, how does that work? And Everty runs a lot of the software around that. It's a really fascinating chat. It opened my eyes to the trajectory of where EV charging stations is going. So fascinating.
Yeah, the fact that it's being factored into so many different developments and kind of anything new that's being built is kind of being built with the EV infrastructure in mind now,
That's
which
right.
I thought was really interesting. So it's worth sticking around for that one. The main story, though, this morning, Sean, big day today as well for economists. But yesterday, the Reserve Bank lifted interest rates to their highest level in 10 years, pushing the official cash rate up by 25 basis points, warning that there are more rate rises in the offing.
For someone with a $750,000 loan over 25 years, yesterday's rate hike will add about $110 to their monthly repayment, meaning that since May, they're paying about $1,250 more. Incredible. The official cash rate was lifted to 3.1% yesterday, the 8th consecutive rise by the central bank, and the standard variable mortgage rate is now above 6%, while plenty were carrying on about the Reserve Bank stealing Christmas, Christmas Grinch, etc. The move was pretty well telegraphed. More important is what the Reserve Bank board thinks about the future. It does expect to increase rates again, but it said there is no preset course. Much will depend on how economic figures come in. Now, the figure that Governor Philip Lowe is most interested in is inflation. It was 6.9% in the year to October, down slightly from 7.3% in the year to September. Dr. Lowe said the bank was resolute in its determination to return inflation to its target range. That target range is 2 to 3%, a long, long way from 6.9%. He's also keeping a close watch on wages, fearing a prices-wages spiral. That's when one leads to the other, which leads to the other. It just becomes a self-perpetuating problem for the economy.
So clearly, Sean, it sounds like there are more rate rises coming. The big question is how many more, and also when?
Well, most market economists believe there will be at least 2 more 25 basis point hikes, and some think it's more like 3 or 4. Dr. Lowe pointed out yesterday that the full impact of the rate rises this year haven't been fully felt yet. He does think household spending will slow, although when and by how much is, of course, the great unknown. Dr. Lowe hopes the bank can slow inflation and avoid a recession, though concedes that path is a narrow one. Bottom line, there are more rate rises coming, probably 2 or 3 in the first half of next year. But if inflation surges, all bets are off.
Okay, how did the local share market respond to the announcement?
Investors kind of expected it. Now, the S&P ASX 200 closed down 0.5% yesterday to 7,292 points. That was more about Wall Street, which I'll tell you about in a moment. Trading has been sideways the last few sessions, so maybe investors are just reassessing the outlook. Remember, during October and November, the market really surged. Well, it's just going sideways at the moment. Tech stocks led the sell-off yesterday. WiseTech Global was down 2.4%, the worst of the large caps. REA Group fell 2%. Macquarie Group and Gold Digger Newcrest Mining, they were also down 2%. The banks were mixed. The big miners were lower, while Telstra was higher. Best on the day, Michael, was Whitehaven Coal, up 2.7%. What a surprise. Worst was Battery Materials Company, Novonix, down nearly 9%.
And international markets, you teased us with it.
Oh, yes. Well, Wall Street really does continue to bump around. It's very, very volatile. Very early yesterday morning Australian time, a measure of the US services sector came out and it showed things were stronger than expected. Now, you think that would be good news, but in the world we live in, any data that suggests the Federal Reserve will have to lift interest rates more is considered a negative for stocks. As a result, the services data came out and 95% of companies on the S&P 500 were sold down. Pretty incredible. Oil is proving a very fickle commodity at the moment as well. Oil rose yesterday morning after China announced further easing of COVID restrictions, but then fell again after Wall Street lost ground. Iron ore prices keep trending higher. It's good for the big miners and for Australia generally as Chinese cities start to relax those COVID policies. And Michael, the Aussie dollar is trading just a bit above 67 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the competition watchdog has warned the airlines not to withhold capacity as domestic airfares reach levels well above pre-pandemic fares.
A quarterly Australian Competition Consumer Commission report shows the average revenue per passenger was 27% higher in October this year than in October 2019, pre-pandemic. Now, that's due to strong demand for travel and constrained supply as airlines have scaled back their schedules in response to high jet fuel costs and operational challenges. While the ACCC says it understands those capacity constraints, it will be keeping a very close watch on airlines to make sure they do return capacity in a timely manner. Now, Michael, airline prices are ridiculously high, 15-year highs, in fact. I was thinking about going to Melbourne, from Sydney to Melbourne this weekend. If I left Friday night and returned Sunday lunch on a well-known national carrier who has a budget carrier, so we're talking about Qantas and Jetstar, it will cost me at least $1,500 return. Needless to say, I'm not going.
No, I can't imagine you would after complaining about the exchange rate and various other things, which is probably fairly minor in the grand scheme of things. I can't imagine you shelling out $1,500 for a return flight to Melbourne.
No, definitely not.
Not trying to kind of paint you as being
tight.
Yes.
Well, maybe I am.
I was just going to stay silent and let your words speak for themselves, Sean.
Fair enough.
Now, the contractor building Snowy 2.0 has been forced into administration, meaning the cost of building the $6 billion hydropower project is likely to soar.
The contractor, Clough, was put into voluntary administration after its joint venture partner on Snowy 2.0, Italian contractor Weavebuild, pulled out of a $350 million proposed acquisition of Clough, which is an engineering group. The administrators, Deloitte, are now scrambling to raise money to keep energy and infrastructure projects around the country going, not just Snowy 2.0, but also LNG projects, electricity grids, quite a bit out there. The 2,000 megawatt Snowy 2.0 pumped hydrogen project includes 40 kilometres of tunnels. It's already running a year late. This is very bad news. Now, Clough's owners, Murray and Roberts from South Africa, said they had no choice but to put the company into administration after the group suffered cost blowouts on other infrastructure projects, not necessarily Snowy 2.0, but on other ones. So we now wait and see what that means for the cost of Snowy 2.0. It's not going to be pleasant, though.
No, certainly not. Sean, the alliance between Australia and the US is unbreakable, and both countries will take ambitious steps together, the US Secretary of Defence Lloyd Austin has told his Australian counterpart Richard Marles.
You have to love the hyperbole of some of these meetings, don't you?
I really love the language. It is just so... It feels like it needs the military kind of soundtrack, kind of a Few Good Men kind of thing running underneath
the background. Yes. That's right. Look, our Defence Minister met Mr. Austin at the Pentagon yesterday. Mr. Austin said the meeting occurred at a time of tension, especially from Russia's reckless and lawless invasion of Ukraine, as well as from coercive and destabilising military activities by the People's Republic of China. The other thing I do like, so I was quoting Lloyd Austin there, the Secretary of Defence in US governments are always very vocal and always very aggressive. And then you go to the State Department and think Hillary Clinton and that, they're the diplomats, and they always are much, much more measured. So it's kind of quite fun.
They kind of balance each other out a little bit.
They do. Anyway, Mr. Marles is due to attend the first AUKUS Defence Ministers meeting in Washington tomorrow, Australian time, which will also be attended by UK Defence Secretary Ben Wallace. The talks are expected to map out a pathway for Australia to acquire nuclear-powered submarines, which of course is central to the AUKUS agreement.
Federal Treasurer Jim Chalmers says the Labor government is prepared to negotiate with the states in good faith on an agreed decision to address rising energy prices, which effectively leaves the door open to compensation for the states.
Yes. Now, the feds are set to impose a price cap on gas. That's triggered criticism from companies, but also from premiers, particularly Queensland Premier Anastasia Palaszczuk, who doesn't want the Sunshine State to lose out if a cap is introduced, i.e., fewer royalties for the state of Queensland. Dr. Chalmers said the Commonwealth could be open to providing some responsible contribution. If you read between the lines, they're obviously thinking about making up for the losses of states like Queensland if a cap is introduced.
Agricultural exports are expected to hit a record $72 billion this financial year, and that's despite the floods that have destroyed grain crops along the east coast of Australia.
While Victorian, New South Wales and Queensland farmers have struggled to get barley, canola, wheat crops off, other parts of the country, notably Western Australia, South Australia and even some parts of Victoria, have produced record wheat volumes. Now, this, of course, is at a time when global food prices are very, very high, thanks to Russia's invasion of Ukraine. Offsetting the higher prices somewhat are much higher input costs for farmers, fertilisers, chemicals and fuels. You put all that into the Mixmaster, you find Australia selling more agricultural exports than possibly ever before.
I reckon if you put fertilisers, chemicals and fuels into a Mixmaster, you'll have the AFP knocking at your door pretty quickly, don't you think?
Good point. Bad use of language.
All right. Now, a couple of weeks ago, Sean, we talked about the CEO of Bank of Queensland, George Frazee, stepping down effective immediately, and slowly more details about why that happened are emerging.
Yes, this story keeps giving. Now, at the time, Chair of Bank of Queensland, Patrick Allaway, said the bank needed a change of direction at the top. To me, it sounded like he wanted someone less focused on growth, more on stability. At the bank's annual general meeting yesterday, Mr. Allaway said the board made its expectations to Mr. Frazee clear regarding his leadership style over a prolonged period before letting him go. Mr. Allaway said the board had lost confidence in the chief executive and didn't believe he had the leadership style or skills necessary to take the company forward. So George Frazee lost his job. what I think is really fascinating in this is that it happened. I don't, without a value judgment on whether Mr. Frazee was good or whether the board did the right or wrong thing, they made a decision and terminated the CEO. I just don't think many companies would do that. So good on the board, though. Once again, I don't have any inside knowledge about how good a CEO he was or wasn't.
And Sean, what a story to come out of the bank's AGM. I mean, a few weeks ago, you were criticising AGMs for being quite long and slow, and I said no, they're full of drama. And hey, look who's been proven right.
Yeah, especially the Bank of Queensland AGM.
Indeed. Now, the rate rise wasn't the only economic news around yesterday, Sean. Australia's current account balance fell by $17 billion during the September quarter, resulting in a deficit of $2.3 billion. That's the first deficit in more than 3 years.
Yes. Now, I'm going to give you an economics lesson. Bear with me, Michael. The current account measures all of our exports and imports, as well as something called net income. And that's all the interest payments we receive or pay out, or the dividends we receive or pay out. Also, foreign aid is in there as well. Now, the September quarter was a little unusual. Let's take the import side. There were many more Australians travelling overseas. That adds to the import number. Also, the value of fuels, notably diesel, Michael, jumped.
Did they? That's a surprise. Yes.
We also imported many more vehicles. Some of those supply chain issues eased and we got more vehicles into the country. So imports surged. On the export side, the East Coast flood disrupted sales in commodities. Cotton was heavily affected there. And then there was this net income, and we had a record net income deficit, mostly because the resources sector, think BHP, Rio, Fortescue, paid out massive dividends to shareholders, including those domiciled outside Australia. So BHP had to pay out dividends overseas. That's a negative. In the end, we had a deficit of $2.3 billion, first time in about 13 quarters.
I've been tossing up whether to ask you this question or not, because this will reveal just how little I understand about some things that you say. But
yes,
why do Australians travelling overseas, why does that add to the import number?
Because where are we spending the money?
And so that is then...
We're buying overseas goods. So if I travel to the US and I buy food and I buy, a ticket to the Empire State Building, and I'm buying overseas goods and services. It's an import.
Even though those goods never enter Australia?
No, because the money used is earned in Australia.
Gotcha.
And so if I buy a TV from overseas, that's effectively the same as going and spending the same amount of money on a hotel overseas.
Sean, you have just achieved the impossible, and you have helped me to understand something about economics that I've always been puzzled by.
There you go. But it makes sense now, don't you? Would you agree?
Oh, it absolutely does. It is crystal clear.
Good. Good.
Goodness me. Let's move on quickly. The Bureau of Statistics also said that spending in October was up nearly 21% on last year.
Yes. Notwithstanding last year was COVID impacted, it's still a big annual rise in household spending. In fact, it was the 20th month of increased spending, with jumps in pretty much all categories. Not surprisingly, we're spending more on transport and hotels and cafes and restaurants.
And Sean, law firm Morris Blackburn is investigating a potential class action against vehicle manufacturer Jaguar Land Rover on behalf of owners of a range of models, including the Range Rover and Land Rover Discovery.
Yes, a class action would be based on an alleged faulty diesel filter system, which causes some vehicles to lose power suddenly, according to the Financial Review. Morris Blackburn says the class action will potentially include tens of thousands of owners, because it stretches back almost 12 years, to include those who either bought or leased a vehicle from 1 January 2011. The law firm alleges that a diesel particulate filter system has been defective and is prone to become blocked in regular driving conditions in at least 15 different models. It'd be interesting to see where this one ends up.
Indeed. Now, moving on to overseas news, and China is reporting fewer COVID-19 cases as the wave that started last month appears to be tailing off.
It's good timing, given China is slowly reopening major cities and decreasing restrictions in public areas. Infections were lower in each of the last 8 days, while regular testing is still required to enter places like restaurants and, of course, in high-risk areas like aged care facilities. Government officials have announced a transition away from the harshest restrictions. Those restrictions, of course, have hurt the economy and triggered demonstrations by thousands of people on the streets of the major cities.
Indonesia's national parliament has approved sweeping changes that include jail sentences for consensual sex between unmarried people in the Muslim-majority country and also makes criticising the country's president a crime.
Yes, these offences are part of a wide-ranging new criminal code that's been years in the making, but the public was given just a couple of days' notice that all political parties had agreed to the latest version. According to the Financial Review, it was rubber-stamped by Parliament yesterday. The legislation is a massive setback for the many invested in promoting the modern Indonesia that was on show at the G20 summit just a few weeks ago in Bali. Shortly before the law was approved, the US ambassador to Indonesia warned Jakarta that it risked throwing away the kudos it earned on the world stage in Bali if the law went ahead. Anyway, it passed yesterday.
And finally, Sean, Nike has joined Adidas in dropping sponsorship of stars making anti-Semitic commentary.
Yes, Nike severed its contract with Kyrie Irving, one of the big-name US basketball stars who plays for the Brooklyn Nets, after he promoted an anti-Semitic film on social media. Of course, it follows Adidas's decision to terminate its relationship with entertainer Kanye West, now known as Ye, who pushed anti-Semitic views on social media. Do you know, Michael, Yeezy, which is the sportwear promoted by Ye, accounts for about 7% of revenues of Adidas. That's a big chunk. So for that company, that is a very big decision.
Yeah, it's a very principled one, isn't it? And
very principled.
Yeah,
good on them.
Fantastic. All right, up next is the Fear and Greed Daily Interview. We mentioned this at the top of the show. Sean, Carola Jonas, the CEO and founder of Everty.
Yep, all about electric vehicles, particularly charging stations, how they run, what the future is going to look like. It's a great interview.
It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And just for the record, Sean, I wouldn't pay $1,500 return for those flights either. I feel like I've kind of hung you out to dry there and unfairly portrayed you as being a little bit of a Scrooge, and you're not.
I think most of our listeners are on my side on this one.
On our side, we're together.
On our side, they'll just say, well, why didn't you book 3 months ago, idiot? That's actually probably a pretty good question. Anyway.
Seems a very good place to leave this. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 7th of December, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.